Attention small business owners. New state-level tax updates just took effect this month. If you operate in any of these states, you could be underpaying, overcharging, or missing compliance entirely. Let's break down what changed, where, and what to do now. Whether you sell physical goods or digital products, even small rate changes can throw off your pricing, margins, and compliance. And state-level tax mistakes are one of the top audit triggers. Let's help you stay ahead. Among the many state tax updates taking effect July 1st, 2025, we've narrowed it down to the 10 most impactful ones across key states. Maryland has implemented a new 3% sales tax on certain information technology, IT, and data services. The goal is to generate revenue and address the state's budget shortfall. Be sure to review your invoices and service categories to ensure compliance. Look up the North American Industry Classification System, also known as NEX, to identify which types of services are affected by this new tax. Mississippi is reducing its sales tax on groceries from 7% to 5%, which could impact pricing and customer demand for food retailers. Also, third-party booking platforms like those used for vacation rentals or event services must now collect and remit state and local sales taxes. If your business uses a platform in Mississippi, check to make sure they're handling sales tax on your behalf. In July, several changes to Utah state tax laws are taking effect. But most importantly, Utah is simplifying its economic nexus rule by eliminating the 200 transaction threshold for remote sellers. Now, the only thing that matters is your revenue. If you make over $100,000 in Utah sales during 2025, you'll be required to register and start collecting sales tax. In New York, a key change in July is that businesses with more than $300,000 in taxable sales over the previous quarter must now file sales tax returns monthly instead of quarterly. If your revenue is getting close to that threshold, keep an eye out. This change affects how often you need to report and remit sales tax to the state. Tennessee has introduced a few tax changes that could impact small businesses. First, short-term rental platforms like Airbnb are now required to collect and remit sales tax on your behalf. So if you rent out a property in Tennessee, make sure your platform is handling it correctly. Second, wineries that sell bottles directly to customers at their premises are now exempt from sales tax on those sales. If you run a boutique winery or vineyard shop, this change could save you money and simplify reporting. South Dakota has suspended its tax collection allowance, meaning businesses will no longer receive a discount or credit for collecting and remitting sales tax on time. If you were relying on that 1.5% discount, it's time to recalculate your margins and update your cash flow forecasts accordingly. Colorado has slightly reduced its retail delivery fee from 29 cents to 28 cents per delivery. This fee applies to retailers or marketplace facilitators that collect state sales tax on taxable goods delivered by motor vehicle. But here's the good news for smaller sellers. If your business made $500,000 or less in retail sales in Colorado last year, you're generally exempt from collecting this fee. So, double-check your 2024 sales to see whether you qualify for the exemption. Arkansas is making it easier for wineries to sell directly to customers. Wineries are no longer required to have customers visit the premises in person before shipping wine to them. This change removes the old on-site visit rule, streamlining direct-to-consumer wine sales. If your business sells or facilitates alcohol shipments in Arkansas, this may open up new sales opportunities, especially for e-commerce and fulfillment platforms in the beverage space. In Alaska, the city and borough of Juneau has introduced new requirements for marketplace facilitators. A marketplace facilitator is a person or entity that facilitates the sale or rental of the seller's property, products, or services through a marketplace, which can be physical or electronic. Examples include Uber, Airbnb, and DoorDash. If you're operating as one, you must now register with Juneau's sales tax office and collect and remit both sales tax and hotel bed tax on behalf of your sellers. North Carolina is introducing a new transportation commerce tax. This applies to marketplace facilitators that arrange for the transport of goods. Think Uber Freight, Instacart, or DoorDash-style platforms. The new tax is 1% of the gross receipts from the service. If your business relies on third party delivery or logistics platforms in North Carolina, watch for possible price adjustments or compliance updates from your providers. It's a unique tax, and North Carolina is one of the first states to roll something like this out. While we've covered the 10 biggest updates, keep in mind that over 20 other states are adjusting their state or local tax rates starting July 1st. These are often small, zip code specific changes, but they still affect your checkout totals, invoices, or in store signage. So stay vigilant and double check any jurisdictions where you sell or ship. Now that you know what's changing, here are 3 quick steps to stay compliant. First, audit your checkout and invoicing tools to ensure the correct rates are applied. Second, use a tax automation platform like Avalara, TaxJar, or your POS provider to handle ongoing changes for you. And third, subscribe here so you don't miss the next round of tax changes. Give this video a like if it helped you stay ahead of the curve, and subscribe for more easy to understand updates on taxes, accounting, and small business finance. Drop a comment if your state made the list, or if you have questions about how these changes apply to your business.